Not BMF you won't. Product market fit. From a VC perspective, what are we looking for? Here's how I think about it when I'm assessing an early stage startup to determine if they have indications of product market fit. It's likely at the pre-seed, very early, like just past the angel stage, when you're receiving your first institutional check, that you won't have solid product market fit. You'll probably have indications of it, like first committed users and people who are continuously engaging with your product or service. And that's a strong indication, but it may not be your final product market fit. And that's okay. So what we as early stage VCs look for in B2C businesses is 30, 50% plus month-over-month growth in your core metrics. Of course, years 2, years 3, years 4, we're looking for anywhere from 10 to 20% month-over-month growth. But at the beginning, we want to see those high double-digit, even triple-digit metrics. I want to see metrics like engagement. How frequently are people using this product or service? And are they needing to use it during something that they do regularly over the course of their day? Uber, for example, the easiest one. We all need to go places pretty regularly throughout the day. Not every day, then every couple days, versus a specialized knife for cutting turkey breasts. I don't cut turkey breasts more than twice a year, Christmas and Thanksgiving. That's probably not a product or service that's going to have a lot of engagement and regular engagement. And when the time comes where I will need that specialized knife, because I haven't been thinking about it, it's probably not going to be top of mind unless it's fundamental. How frequently are people engaging with your product or service? And that, from the VC perspective, gives indication. The more frequently that they're using it, the more we understand that this solves a real problem that they have with regularity. And not only with frequency, but the duration. So we don't want to see people use it a lot the first 7 days and then kind of drop off or not really engage with it after. We want to see that after 30, 60, 90, 120 days, people are still engaging with the product as actively as they were at the beginning. That shows that this is a real need and that there is a real habit and potential for continuous engagement with this product or service. The other thing that I look for as a venture capital investor is, what are people willing to sacrifice in order to use this product? Is that they'll use it for free, but the moment you start charging, nobody's really interested in it? Time is also a valuable asset. So how much time are people willing to engage with your product? Also, is it meaningfully better than the competition? Another thing we look for indication of product market fit in the B2C side is the community built around your consumer base. A lot of companies, especially in the fintech space, have benefited from being able to leverage community building, where people are pulling their colleagues in, not just because the product is great, but because there is some sort of culture around the engagement and usage of your product. PiggyVest did this phenomenally, as did Bamboo, and so too did Paystack. If you go onto their social media platforms, you will see that their customers are actively engaging and defending the company and its product. And on the B2B side, this could be a SaaS company targeting enterprise, a financing company targeting SMEs, a health tech company selling to other businesses, etc. So some of the things that we look for is the delight of your business-to-business customer. So we would, as an early stage investor, we would diligence, which would mean we'd have conversations with and interviews with your customers to understand and ensure that, 1, this is uniquely differentiated from the other available options in the market. 2, that you are specifically solving a need that they either don't have the time to focus on or they don't have the technical capacity to focus on. And 3, that they don't have to fundamentally change their business in order to buy and engage with your product or service, as they are doing things right now. And this goes for B2C and B2B. There doesn't require a meaningful amount of customer education or change in behavior. The other thing that we look for with product market fit is that you are the one actually receiving the money. And there aren't a number of issues that could lead to either disintermediation, that means people using your platform at first and then realizing they can connect independently of your platform, or you don't have concentration risk, as in order for your product to be delivered to your end user, there's not one person or one platform that you have to go through. So these are some of the things that we think about when identifying product market fit in an early stage company. If you want to learn more about product market fit and what early stage venture capital investors are looking for, ask questions in the comments. I'm always here to answer them and to create new videos based on what you want to learn. And also go to www.ingressivecapital.com and apply for funding now. Thanks. Have a great day.